don't do that. So just be getting started in a moment here, and we'll get going. Yeah. All right, so we're recording now, and this is the first of a series of town halls we're going to do, and we thought, what better way to kick it off and bring Jamie Rogozinski. I swear I'll get that right at some point in time.
You got it, yeah.
Okay, I'm getting there. The original founder of our Wall Street Bets. It's great to have you on. Thanks for coming on.
Yeah, thanks a lot for putting this together. I keep jumping in and out of voice chat, but I just feel like I end up repeating kind of the same stuff because there's different audiences. So I figured this would be a good way to practice a conversation with everybody and have some fun doing this.
Yes, my two co-hosts will be Meow Meow and Jay Root. Welcome, guys.
Yeah, it's good to be here. Thanks, Vix.
So, let's get this started, because I think the first question that everybody asks is, how did Wall Street Bets get started? Where were you sitting, and what compelled you to, start the idea and, initially?
So I have answered this question 200 times. I don't mind doing it again, but everyone here is pretty smart. Like, literally look up any interview that I've done or any podcast, and that's always the first question. So I think in the interest of time, we can skip that question. The really high up stuff, I started it in 2012. I was looking for a place to take a risk, couldn't find a place to do it, and decided to make my own.
Yeah, there's a bit of drama between you and Austin. They would always tell you, no, you got to do all this risk management and X, Y, Z, and go do covered calls or whatever. But you wanted to make it very focused on, the idea of kind of the degenerate aspect of it, right?
Yeah, I mean, it's degenerate is something, a term that kind of appeared a year or so ago. There's been different terms, but I was looking for a place that I didn't work. You want to find work. That's what my retirement fund is for, and that grows a few percent a year. And sometimes on a good year it'll make 10%, and on a bad year it'll lose 10%. But overall, it averages 5% a year. But I was looking for something more aggressive, right? Risk and return go hand in hand, and I had extra money laying around for doing this sort of thing. I was single, didn't have kids or anything, so I could take the risk. So I was just looking for little returns that were more than 5% annualized. 5% per trade, or I got options. Well, those percentages get crazy, but yeah, it's just being more aggressive. Really, is what it came down to.
So go ahead, Jay Root.
Thank you. So, Jamie, thank you for being here. So let's talk about the token. Let's talk about the project and kind of dive into it. So maybe just give like a high level overview of what you're trying to do, and then we'll jump into some of the more details.
So the crypto world has been growing since around the same time Wall Street Bets started. Both came around the same time. It's a different world, different reason for existing, but it's got a ton of similarities. And at the end of the day, once you really narrow it down, it's only logical that the things that were happening on Wall Street Bets, or the things that were happening in Wall Street in general, started converging with the stuff that crypto is doing. It starts off with Bitcoin. You know the story. In fact, probably better than me. The world evolves. All the flaws with Bitcoin get kind of fixed. A lot of really creative ideas out of the starting gate. People dreaming about smart contracts and things like that, but really premature. But as the years go by, the whole crypto world becomes more mature. A lot of problems get solved. A lot of really creative solutions to it. And you have a lot of different tools and coins and exchanges and universes or networks or whatever that you can traverse. And so a lot of what you actually see in a regular financial market. You know, I would joke, I would make fun of people that were putting Bitcoin up on a chart when it first started, and that's because it was missing a lot of the components that make a chart valid, right? But now when you have so much liquidity, you have so much volume, you have, you know, you have a system that's really well thought out, then it behaves just like Wall Street. It's just using a different instrument. So this coin is kind of, yeah, we've some overlap things into there. You have Bitcoin futures trading on the Chicago Board of Exchange. You have, you know, Coinbase that just went public, which is a nice symbolic moment, but doesn't have much of an effect. But you have a lot of ETFs that are trying to go out and in the regular exchange. You have tons of what do you call it? Funds. Well, I guess it's Forex, but it's also transferring funds if you want to send money from the other. Crypto has done a really good job at kind of being the intermediary, using that technology with it. And so there's already been some overlap. But this particular coin, I think, is going to be the first official mega overlap, right? The idea with this coin is to create a community that can mint these ETPs. And these ETPs are going to be constructed with, once all is said and done, with instruments of any type. So these are crypto coins. These are stocks on any of the stock exchanges. This is the US or abroad. It can be Japan, Korea, whatever. It can have commodities, metals, energies. You know, this is like gold and oil and whatever. Just anything that gets traded in the normal financial system can go into these ETPs, and these ETPs are backed by, you know, the blockchain technology, and it fixes a whole lot of things that are wrong with the regular Wall Street. And these are things that people in the crypto world have been screaming about forever. But now there's a time that we can actually come make this happen. And so this is a wonderful moment because it does a lot of things, right? It further democratizes finance, the world, makes it more accessible. But people anywhere can trade securities from anywhere, something that's currently not the case. These securities trade around the clock. The way that the routing for these things work, like the mechanism behind the scenes, fixes a lot of the stuff that's wrong with the existing market. And so you end up with a system that's better, that the crypto world has been screaming about forever. But you get to invite the crowd of regular Wall Street that's been afraid of the crypto world. We buy crypto, but that crypto is actually collateralized and backed by underlying assets, which Wall Street is used to seeing, right? In the form of ETFs or ETPs, exchange traded products versus the exchange traded portfolio. So that's the vision.
All right, that sounds great. So let's kind of dive into what an ETP is and how they're created, and kind of just the whole process that's going to go on in terms of creating the USB token kind of expect.
So the way that I like to explain it is, people that purchase the WSB token, they're legitimate shareholders in this decentralized organization, but in the purest sense, not like shareholders in Microsoft. And once once this organization has grown to the point where we're ready to start minting these ETPs, all the shareholders, all the holders are going to get together and through this decide what they're going to do with ETPs. And they can create one, which is probably going to be the case at first, and then they can create multiple ones as money permits. Whenever an ETP gets created, you need to have a certain amount of interest and money involved, or else the mechanics don't work. So, the community is big enough, and if there's enough interest, once there's enough interest in a particular product and everyone votes on it, then that ETP gets created, and you have an entire process where you have different mechanisms by you can buy something that replicate their value. And this is something you guys are probably accustomed to when you're thinking about wrapped coins, right? Like if you think about how that works, it's someone's buying a coin on the other exchange or network or whatever it's called, and you're holding it in yours, but the price is the same. Same concept, but now you're actually going to be able to do that with shares. You can think about it as wrapping Tesla shares, right, or wrapping oil contracts, and the possibilities are truly endless, because the moment that you can buy an ETF from Wall Street, you have a ridiculous array of choices, because there's ETFs that are extremely creative and sophisticated. This means that you can, in your ETP for Wall Street Bets, people can actually have mortgage-backed securities in there, collateralized debt obligations, credit default swaps. I mean, the craziest things you could possibly imagine, they're possible. I don't predict that they'll be popular, but the very idea that this is doable in the crypto world is really exciting. So that's kind of the way that I explain.
I really like that the possibilities so endless, and it crosses the border between traditional finance and some of the markets that maybe the average investor may not even really touch, and be able to include them into an ETP and create something that currently doesn't exist. I mean, there's no way right now to create an ETP or a product like that that's going to cross from crypto into the traditional markets and into some of these other things. What ETP are you looking forward to most excited about, or what kind of a basket do you really think would be, the one that's going to really catch your attention?
Yeah, and this is the first time that it crosses into it. I mean, the proof of concept is there, by the way. They've done this with Tesla on Binance. And so the moment that somebody pulled that off, now the gates are open to do it correctly. So this is the first time that you have this purposely overlapped mix, where we want a basket with stuff from both worlds, right? What they did with Tesla was a proof of concept, and you can wrap from to the other. This actually go through and push it forward. What am I excited about? I'm not going to try and make predictions. Like, I know there was a study that came out by some university, and they did a very thorough 30, 40-page study with graduate level math and graduate level statistics and all that stuff. And they pointed out that Wall Street Bets, through their craziness, they do end up beating the market with their stock picks, right? Because the collective intelligence is proven and optimal in some cases solution, that then there's proof that communities can pick the best things, right? So I'm hoping that's going to be the case. I don't pretend to have that collective intelligence to try to predict which stocks or assets or whatever are going to go into this thing, and that's what I'm even more excited about. Like, I'll get a chance to vote, that's for sure. I'll share my opinion, but I'm not good enough to the best. It's why this thing is powerful, because now it's going to be a collective that comes together and comes up with this. What I would be excited to see is a nice basket with everything in it, or at least a little bit of everything in it, because that's going to get me to showcase these possibilities. As far as which one I think would be the most successful, I don't pretend to know. And the other thing is that people, because this democratic process is in place, ETP can be designed for different financial profiles in mind. So if you want these YOLO funds or whatever that go crazy and you can make it all or lose it all, you can have those. And then if you want to have, on the complete other side of the spectrum, a super stable boomer style Warren Buffett, Berkshire Hathaway thing, you can do that too. And so you can have both of these running, and one is going to be either making 100% or 500% or losing 100%. And the other one might be making your 5 or 10% a year, right? But using these technology, diversifying. For those that are more conservative, they're diversifying with a lot more efficiency than what people are currently able to diversify with.
That whole idea of the community being able to be the ones to put forth and then have there be debate, because we've definitely seen that the communal effect of what something like Wall Street Bets, when they come together, can do really beat the market, because at the end of the day, we like to just have fun, but there are a very core group of very serious people who put together really great ideas and work together to leverage that knowledge together to be able to put forth something that, like you said, individually we might not be able to come up with. I'm really interested to see how, when that process starts evolving, the level of um, participation is going to go into debating about certain things, like the percentage that something should hold in in an ETP, or why something should or should not be in an ETP. And I think that having that democratized, which I know is a big part of this, where we get to vote, I think is going to really open up something that we've already kind of had, but we didn't have a method to be able to really bring that together for the community to do as a whole. It's kind of been somebody expands on the idea, and people will gravitate to that idea, but it really doesn't have the ability where there's a voting and there's a process where people are really discussing specifically about one idea and working towards that one idea to make it the best idea as a group.
It is, and there's something else that makes this thing special. So in my years of Wall Street bets, I counted the number of times people came to me and said, "Let's do an ETF for Wall Street bets." You know, we'll just take a basket of the stocks that people are talking about, throw it in there, and then people can buy it that way. And I always turn it down for a lot of reasons. And now you have an ETF that was endorsed by Dave Portnoy, which is a meme stock ETF, right? So of course GameStop is in there and a bunch of other ones. The idea is nothing new. You know, I guess this is the first time that it's gotten some buzz around it. In fact, that's the name of the ETF, and it goes. But the problem one of the main problems with ETFs is they're missing the point of these meme investors, or the style investors or traders or whatever we call them. That they're have previously coexisted. You know, first you have traditional investors, the Warren Buffetts, whatever. They're like, I'm going to find something whose book value is under the market value, blah, 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 or backwards, you know, and they invest forever and they hold on to these investments for pretty much ever. And the idea is to try and keep up with inflation and da, da, da. And then you have active guys that are in the hits or that are, you know, charts and doing all technical analysis on there. Those guys do their own thing and they don't disturb each other, meaning the investors and the traders. And then you have these algo traders, the computers that do the high frequency stuff. And they all, you know, all these participants actually help the functioning of the market, by the way, through liquidity and stuff like that. So these high frequencies, they have their algorithms. I don't care about the value. I just care that I'm really close to the exchange because these milliseconds really count. And I'm just scalping these little fractions of a penny, blah, blah, blah. And now you have this totally new investors that are like, well, fuck that. I'm interested in discounted cash flow analysis. I'm not doing astrology on these pictures with these charts, and I don't have computers that are good enough to trade these things. I'm going to trade the stock because I like it, you know, or because I think there's a short-term thing. And, you know, the pandemic, let's all flock to Zoom, or Hertz declares bankruptcy, and let's all flock to that. And those prices skyrocket. Same thing happened with Virgin Galactic. Same thing what happened with Plug. Things, you know, there's endless examples of this where these short-term trends, the last couple of days or a little bit most, in some cases even less than that. They go in and out really quickly, and that's how they're able to be successful. These are not long-term investments, and they've proven, Wall Street Bets has proven that this is effectively a viable, profitable strategy through their own craziness of doing things. And so what this ETP allows you to do, which the meme stock ETF is going to fail at, is being agile or nimble enough to switch around. A meme, by definition, is short-lived. They some days or weeks or the most months, and then they die down, and then they pick some new one to go with. Because of the system that's in place where you have frequent rebalancing every couple of weeks, now you have this dynamic thing that really moves a lot, meaning the composition of this ETP moves a lot. And so now you can actually harness the power of these individual stock pickers and this collective intelligence. The main flaw with all the other proposals I had and with the meme stock ETF is they'll rebalance. I don't know that, but I'm guessing at most 3 months, and that's being aggressive. And they'll miss the boat on a bunch of stuff. So this is very powerful.
So BTC VIX here, and I'm kind of like one part host, one part interviewee as well. I think what's really important to kind of understand here is that, you know, that I think when it comes to these ETPs, if you broke it down into 3 components, there's probably 3 components of value, one component of kind of marketing / meme. What I mean by that is the community is going to have to propose these ETPs and garner support from the token holders and the community at large to basically pass these ETPs. So I've been saying for a while, as much as maybe a DeFi ETP sounds cool, I'm just kind of wondering how that gets, you know, how does somebody get a proposal through and get the ETP approved? So that's why I kind of look to some of the more creative ways of ETP, where it could include NFTs, actually. I mean, if the instrument is if we can provide liquidity for the instrument and it has a value, then it can be included in the ETP. So, you know, that'd be one other interesting thing in terms of how do these ETPs get created and voted on by the community. Because I think people are going to get pretty creative because they need to have a value component to why the ETP matters, but they also need to have, you know, the kind of people interested in it. Because that's really what's going to move the needle with a lot of these ETPs, and that's why I've suggested one of the first ones will be, you know, your wife's boyfriend's crypto ETP. Because everyone starts giggling and chuckling to that, but then there's going to be a value component to the constituents and why, you know, why is what's making up this ETP, and why should people be in it as well.
Yeah, I mean, absolutely. That's why I don't pretend to try and predict what's possible with this thing, because NFTs exist today, and that's why we can throw them in there. But there's a ton of stuff that doesn't exist yet. This mechanism is built in such a way that we'll be able to plug that in there as well. So, you know, things that have value and liquidity and are traded in some place that's accessible, then we're good to go. And we have the helping hand of regular world ETFs, which do a ton of that stuff. That's I mean, if you're trying to trade like Lean Hog futures, you know, I mean, we're talking about if you were to buy one and accidentally forget that you bought it, you'll get, you know, lean hogs delivered to your house, right? There's stuff in the finance world that's just trickier to work with. Same thing with crude oil, right? And literally anything's possible. So I don't pretend to know what's going to happen next.
Yeah, no, and that's like kind of the whole thing is that it's going to be driven by the community, and it's going to go where the community has things great. Last night, it wasn't an official AMA. We were just chatting, and one thing you spoke about that I really liked the idea of is creating a Wall Street Bets sorry, and being able to have something that might be able to show the market moves faster than some of the slower instruments that are out there. I was wondering if you could talk about that again.
Are you talking about when somebody asked me about why crypto's correlated, and I got into my diatribe, right?
Yeah, pretty much. If you could do that and not technical, but you basically had said like you would love to see one day the Wall Street Bets, on CNBC as basically an indicator that would show movement maybe a lot better than some of these older instruments like the Dow or stuff like that.
You may have. I mean, you understood my point, but I may not have expressed what I was meaning to say. But I'll go through all the different components that you just mentioned, right? So you have markets that are interconnected. This started from a question regarding why cryptos are connected. And then I said, well, not only are the cryptos connected, meaning correlated, not only that, the cryptos are also correlated to the stock market. And then I got into a technical reason as to how and why that is. A lot of it has to deal with arbitrage. And once things are interconnected, things affect each other, and they also get a huge bump through liquidity and blah, 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 and things become more efficient. And you have different efforts to create indices, right? That say, okay, so how's the economy doing? And then people like to just look, well, Donald Trump especially, but a lot of people like to look at a stock and say, well, that's a reflection of it. And while it can be disconnected a lot of times, it also is more connected in the bigger picture than not. And so in order to get there, people say, okay, well, how can we come up with a number that lets people know that things are in the right direction and being able to tell a complete story? And so the most complete index for that is the S&P 500. There's a handful of other ones, and there's forks from that one. Like there's small modified versions of that one that do the same thing, but the S&P 500 hits all of the sectors, 11 or 13 sectors. This is from technology to consumer goods to pharmaceutical to blah, blah, blah. And so you're like, all right, cool. Now we have stocks in all these different things, which means if they're all going down or if they're all going up, then we're doing well. And you get a complete picture. But then you have the NASDAQ, which is another index. You have the Dow Jones, which is the favorite for TV for some strange reason that only has 30 stocks in it. But the idea is the same. So you could have, there's a lot of stuff that these indices don't yet reflect. These things are just reflecting stock prices, and there's a lot of faults to that. A lot of people like to point out that the stocks are up because the Fed is printing money, blah blah blah, and there's merit to that perspective. It's very complicated. There's a lot of components, but that's one important component. But you also have this not monetized, but numbers that gets thrown out there that's popular. I think once a month is the non-farm payrolls. These are basically how many jobs were created that are not in the farming industry, which sounds like it's a weird metric to have, but it's probably the metric that, outside of the interest rate decisions every 3 months, it's probably the most volatile metric that people go off of. And you'd think, why did they do that instead of unemployment numbers or payroll or whatever? And it's because you have cyclical moments, and the farming community is cyclical. And so just because you didn't create jobs, sometimes you do create jobs in farming, but it's misleading because it's farming season, blah, blah, blah. So I'm like, all right, so now there's little efforts to try and do these things. There's so much more to the economy than just these companies. And you have to kind of adjust it sometimes for what month of the year it is because it's the seasonality. Same thing goes for Christmas and shopping, right? Like you have sales numbers that go up and stuff like that. But the economy is so much bigger than that. The crypto world in itself is a massive, massive economy. I don't know how big it is. Maybe somebody here does, but there's a lot of money in crypto, and there's a lot of people that make a living off of crypto. And and a lot of these productive activities that people are engaging in aren't being measured anywhere. And so having an index to add, not to replace, because there's no perfect one, but it's just an additional metric that says now we have a collection of goods inside of some ETP or some index that now can really factor in whatever your imagination wants to put in there. You can throw real estate in there as part of the into the mix, because you can, in a way, put real estate into these ETPs.
So I think one of the biggest parts of town halls is questions from the audience. So I'm going to recommend, if you have a question, you can push allow to speak. It'll kind of raise your hand in a clubhouse manner. And then I'm going to let Jay Root call on people so that the rest of the hosts aren't calling on other people. And then Jamie will be able to take your questions.
Great. Thanks, Vix. So Lucifer Morningstar, I see you here. So I'm going to bring you first. You can speak. I unmuted you.
Maybe he muted himself.
Yeah. All right, cool. So if there's anybody else that wants to come up, the floor is open. All right, Simon, got you. Here you go, buddy.
Oh, sorry, I was muted a little bit. How are you guys doing? Hope you guys doing well. It's nice to see you guys here again. Very active. I want to ask that. I mean, how serious are you guys with this project? Because this could be going very serious. Going against Wall Street if this taken seriously and putting tremendous energy into this project.
So great question. You know, the answer is very seriously, and I'm aware. That's why I did this. I was uninterested. I've turned down a bunch of crypto offers as well. I almost turned this one down until I understood a little bit better what it was. And then I said, all right, this makes sense because I do have an appreciation for crypto, but it's not my expertise. My competitive advantage is in the other world. And so my time is better spent in what I know best, but I have a tremendous appreciation for it. This particular project called my attention because of what you just said. It has the potential to do anything, and it has to be well executed. You need to have the right players, and you have to have the right timing. And this project has all of the above. You know, the team is absolutely fantastic, and you know their track record is impeccable, and the timing couldn't be better. And I'm a proponent of, where I frequently say timing is probably the most important thing that'll determine success of something, and the execution is also. So the ambition is very much to do that and to get there, and to do that, things need to be done right. And so, you know, and the way to do things right is to do them slowly and steadily, right? And of course, there's hiccups. We saw what happened the first day, and to be honest with you, like I talked to some of the devs, whatever, and they're like, my God, this is a crazy day, whatever. I'm like, what's crazy? Like, this is a day, and this is what happens, and this is life, and this is going to happen a million times. And that's just the way that a real world works. You know, people crash their cars or whatever. But you know, with trying to speed things up, mistakes can be made or not properly thought through. And so everything has its stages in order to do that. So stage one, get this thing out in the open, you know, let people start buying it, whatever, work out some kinks, get past whatever little hiccups took place, you know, and then you have these little hiccups can be whatever, you know. I found out last night that the Pancake is updating their system or something. So that kind of complicates a little bit some stuff and whatever, you know, we'll get past that. And the next thing I see people, well, now we need to be listed on this, that, the other. And we'll be doing that gradually. Same things with the press releases and things of that nature, the marketing components, and eventually the production of these ETPs. They have to be rock solid. That's the reason why we're starting with one easy one, which is just in the crypto world, because that's the one that's the least complicated to start off with, and then learn some lessons from there. And mistakes will be made, I guarantee you, but that is this, you know, that is life. But if we do it all at once, then we run all sorts of risks. And one of the things that I kind of, you know, not confused with, I can understand the reason why, is that there's this thing is powerful because it's going to bring two worlds together. It's going to pull the crypto world into Wall Street, and it's going to pull the Wall Street world into crypto, and they're going to meet halfway in the middle. And so both parties, or both universes, are going to step outside of their comfort zone into something that they're not familiar with. And so what does this mean? This means for non-crypto people to figure out what the hell to do with these wallets and putting them into the liquidity pools and networks and all that crazy stuff. That's confusing at first. And for the crypto people, it's, hey, this asset is going to behave like a normal asset that exists on Wall Street, that is taken seriously. You know, this is not a get rich quick scheme. This is a get rich scheme, right? But that's done slowly and steadily. And to me, the interesting thing about that is when there's critics out there that say this is a scam, whatever, because it's not going up 1,000% today. And I'm like, let me get this straight. It's a scam because it's not behaving like a scam. You know, of course, we know things that go up 1,000% a day are pump and dumps, and they're short lived. They go up and then they crash right back down, and then everyone gets their little crazy wild. And I realize that there's been a lot of money that's made that way. But this thing is not that. This thing is in the middle of the two worlds, where things grow slowly and steadily, and having too much growth too fast puts things at risk. And it's a different way of thinking. When I express these things, you'll have people that say to me, "You don't understand. You weren't here in 2017. This, we have post-traumatic stress disorder from what happened." And I know that it's very resonated. And I'm like, all right, cool. I'm sorry about your, traumatic experience. But rest assured, this thing is on course for doing exactly as it was meant to be. And if you're here to get rich overnight, then you're not buying into the bigger picture. There's plenty of coins that you can go find that do that. This particular coin, I keep seeing people try to throw out $1. This is going to get to $3. I just throw out $30. Like, we don't know what it's going to be. Nobody thought Bitcoin was going to be at 50,000 or more. Nobody. It's impossible to predict. So maybe it'll go to $3. Maybe it'll go to $30. Maybe it'll go to $300. Maybe it'll stay at $1. Who knows? Like, it's a matter of a lot of things that are unpredictable at this point. But what we do know is we're going to do our best effort, because the more demand there is for this token, the more participants are care about and are actively involved in this, and they start buying into the bigger vision, because they realize being involved in the entire process makes this thing more valuable, and that makes these tokens also more valuable. And people having kind of that mindset. So that's my really long-winded answer.
Thank you. I really love that answer. It's fantastic. Andreas, DeFi Ventures. Let me unmute you. Go right ahead.
I think you're.
All right. Let's go, Andy.
Chop.
Can you guys?
Yes, I wanted to ask. So for this, so we're our whole thing for it to work. It is based on the herd mentality, right? Where we can, do research and then check with each other. So that's how this whole thing works. And I wanted to know about the voting mechanism. What are we doing to prevent whales manipulations or any type of problem as far as voting and make sure it's fair?
So just to start off, like, I'm glad you mentioned herd mentality, because I was meaning to touch on that earlier. There is a herd mentality, as far as I'm concerned, is a bad thing. The process that I described earlier is a good thing. Why is herd mentality bad? Because it ends up taking us to war with Iraq because of weapons of mass destruction, right? People that don't question things and just get into it. That said, there's a lot of power behind it. So it's this strange combination between having a few people that are very talented and have really good insights and have really good ideas, that share these ideas with the rest of the group, which then becomes more average as far as their expertise in this area. And a properly sold idea gets a lot of approval from, now I'm going to call them the herd, right? And this is what happens on the subreddit with Wall Street Bets. You have a smart guy that goes in there, gives a huge thesis or whatever, and then a bunch of people just kind of they upvote the thing, or they like it or whatever. Not entirely uneducated on the fact, but they let somebody else do the grunt work, and that's kind of where we're going. So it's this: the power comes from this combination between innovators and herds, and that's the power that we've seen in open source software. We've seen open source projects with any collaborative efforts that exist in the world. There's been wonderful things. So I just wanted to clear that up. And what's the mechanism that's going to be in place? Look, I'll speak to the high level, because that's what I understand. And then if there's further questions, Vix is going to know better. But we're doing this through the blockchain, these smart contracts. So whatever that crazy technology that everyone really trusts in right now, because it's unhackable, that's the way. So you have your shareholders. Somehow there's a system in place that's going to compute those votes relative to how many stocks you have.
I can help with this. And yeah, I mean, every project doesn't start fully decentralized. that's kind of the nature of crypto projects. Is you need to have some trust in the team to kind of get the ball rolling, and then the idea is to go and continue to move towards more decentralization and full decentralization. So these initial ETPs, are going to be steered a little bit more by the bigger token holders, because we're still, we're only like 72 hours out of launch, right? And by the time these ETPs come on, we already have almost 8,000 address holders, which is pretty good for 3 days, and that'll continue to be more and more distributed. So as time goes by, the community component will become even more more balanced. So I think that's kind of the way you have to look at it. The idea isn't just to have the whales steer all the indexes and be back where we're just having 5 old guys in a boardroom once a quarter deciding the composition and the constituents weighting of the indexes. So I hope that answers your question.
And then if I understand this correctly too, Vix, is that at the end of the day, even if an ETP is minted, you still kind of have a vote with your money, because you don't have to necessarily support the ETP by putting your money into it. So if, these mechanisms kind of do go out of whack, which I totally love the idea of not going full decentralized first. At the end of the day, even if an ETP comes through, its success is really then judged by how much people are using that ETP, right?
Yeah, I mean, this is that also comes down to what people decide to buy. I mean, if the ETP isn't interesting, you're going to start to see the total value locked and such like that, decline. So that's going to be also interesting to be decided upon how to wind down some of these ETPs as well, if they lack interest or lose interest over time.
Awesome. Let's see who else we got. Let's go ahead. Next on the list, we've got Block Geeks Matthew. I'm going to unmute you. Go ahead, Matthew. All right. We're going to move to Avi Crawford.
Yeah. I think I was muted before.
Oh, go ahead. Yeah. Hang on one second, Avi. We're going to go to... yeah, go ahead, Block Geeks.
Thanks. Sorry, guys. Yeah, the mute was still on. I thought it was unmuted. Anyways, exciting stuff. I found out about this through the Crypto Conversations podcast with Jamie. So I'm like a year into my crypto rabbit hole fall. My question is kind of technical. It's like, so I followed all the guides and tutorials, and I purchased some WSB tokens on using PancakeSwap, using Binance Coin. How does the farming aspect work? I know there was a call for like yield farming to be done soon. Could you guys speak to that? Like holding a coin is not the same as farming it, right?
Yeah, I have no idea.
This is just very typical farming, right? So the concept behind farming is really to provide additional liquidity for your token, your pairs. So you incentivize people by giving them more of your token. It's usually the APYs that we always see, pop up, and people chase after these. And they're providing, liquidity, which basically means both sides of the book. Say it's, WSB, BNB, right? They have to have equal amount of BNB on one side and WSB on the other side. And then, that's you're basically becoming a market maker. And it does all of the, like, PancakeSwap do this automatically. That's even why it's called an automated market maker. And then you're able to collect those farming. You get a farming reward for doing so, and that should be starting shortly. We were just testing some of that stuff yesterday, So that's probably one of the things you'll be seeing in probably the shortest order, as well as a new website that we also sneak peeked yesterday.
Cool. So there's like 3 different ways you can earn money with this. There's like buying and holding the token, there's farming it, and then there's investing in the ETP one day when it happens. Yeah.
Actually, that third one. I actually had that same question. I'm making an assumption. The first 2 are correct, and then the third one. Well, the hope is that you make money by investing in the ETP. But my question is, can a non-WSB token holder buy these ETPs?
Yeah, they can actually.
Okay.
I mean, the entity is created. It's just through the voting mechanism that encompasses the WSB token holders. When the ETP is in the wild, it can actually serve a lot more functions in terms of it doesn't need to be native to just the people that are holding the token in any closed garden scenario. And those ETPs can actually get listed on other dexes as well. So that it actually becomes it's its own entity and can float around and be, other dexes can pick that up and decide to list it as well.
Yeah, I assumed as much, but I actually hadn't gotten confirmation. So that makes a ton of sense. Thanks.
Awesome. Thank you. We're going to move on to Ave.
How you doing? Yeah, my name's Ovi. Appreciate it.
Go ahead, Ovi.
Yeah, no, that's cool. But yeah, speaking to 2 points, I like how Jamie was speaking on that the coin price wasn't acting like a scam token, because it does give it faith that we're all looking for that bottom. It was looking at 16, I was like 15. So it is.
Can I just say something? Can I just say something about that? So aren't you guys the ones that coined the term hodling, right? And I'm just laughing because that word came out of crypto, and I'm like, where's that word when you need it, right? I don't know what the bottom is, and I'll let you finish your question because I interrupted, but I'm not sure looking for a bottom is ever a viable trading strategy. But what is buying and holding. Anyways, go ahead with your question.
Oh yeah, no, sure, yeah. Well, I'm daily cost dollar average again right now, so I'm just playing the game by the rules. But I was wondering speaking to the 2 points before me when you were saying the voting, does there allow a space where we can allow proposals from the group and those proposals get upvoted to potentially be on the ballots, say, speaking of
That's exactly how it works. That's 100% how it works. The only way a proposal gets created is by these token holders. So you hit the nail on the head. So the reason why it goes through that process is similar to why you have primaries in an election. You need to reduce the number of candidates, and that's kind of how that works. So you'll have proposals that are out there, and they can be as many as people want, and there needs to be a lot of support behind any given proposal for it to be created. Because if you create an ETP with just one dude that wants it, that ETP is going to fail. So that's 100% the way that it's planned.
I appreciate it. And I get a lot of faith value. Thank you.
Thank you.
All right, let's go to Yernikin. Let me unmute you. And if you want, go ahead, ask your question.
Hey guys, what's up? I actually have 2 questions. The first one, I saw like a crypto coin called Mirror Protocol. And I think like what you're saying is very similar to its idea. So if I'm not wrong, there are already like Mirror Protocol ETPs like Twitter and other ones. Yeah, that's my first question. And the second question is on tokenomics. So if you go on PooCoin and there's a tool for checking different projects for rug pulls. And recently I checked your project, and what I found is that like 5 wallets hold around 50 or 60% of all tokens. And can you speak on that a little?
I can take this question. So first and foremost, the question regarding sorry, I'm just blanking right here. The Mirror Protocol, right? So that's basically tokenized assets on the BSC chain. They're still pretty much so in their infancy, and we certainly would like to be on the BSC chain in terms of fees, etc. We're going to currently launch on Balancer, their version 2.0, which I think is slated for April 27th. Actually gives us the ability to do what we're proposing here. But that doesn't mean that we have any exclusive aspect to the protocols that we're going to use for this. It's just more of a, what has the functionality and development behind it, and the trust to do these things. So right now, Balancer is probably the most trusted on that and has done the most amount of work and development. But that doesn't mean that. I mean, we're very interested in Mirror, as well as some of the other chains and projects that are doing some of the similar tokenized stocks and assets. So I think that answers your first question. The second question around the tokenomics. So we've the significant majority of our coins outside of the treasury, the liquidity, what the initial public sale tokens, as well as there might be a couple other ones that I'm missing in there. I think the rewards, so the farming rewards. So outside of that, basically that other 50% that you're seeing is vested tokens, and they are at an escrow agent that's providing the vesting contracts via legal means, via SAFT. Now, I've heard many of times people in crypto say, well, why don't you just put it in a smart contract, like the crypto way to do it? Well, the problem with that is, as great as it sounds, because you can definitely program a smart contract to provide whatever the vesting schedule is that you want, the address in there is hard-coded. And there are people that, for whatever reason, lose access to that address and that seed wallet. So there's entire founders that have been shut out of their project because whether they lost the seed or got compromised or forgot it, something to that effect. You'd be surprised how much that happens. Even though it's more tedious to go about it via legal means, that is actually the preferred way to do it. Does that answer your question?
I guess so. So you're saying that there are basically a bunch of competitors besides Mirror Protocol to your idea already?
Yeah. So I mean, there are other. I don't have any problem with Mirror, and I think what Mirror's doing is great. I'm just stating that from a development side of things, they're not quite as far along as Balancer. That doesn't mean that it's all or nothing. This isn't a binary condition, and there's no issue with looking at those other protocols for what we're doing.
Okay, thank you.
All right, so real quick, let's go to Andy, and we're about coming up on the hour. So Andy,
yeah, this will have to be the final question.
Yeah, thank you.
Okay, so I wanted to ask about the value of the ETP. So it can't be tied to the underlying asset, right? Because it would have to tie to how many people put in the pool. Is that right?
It's tied to, so basically there's kind of a process here. You need to have the underlying components, and then that composes the ETP. So there's times where this will actually be arbed out against whether it be other protocols or even in the market itself. So I guess that's kind of the short answer for what you're asking. But does that make some sense? Because it's still a tokenized instrument, and it can go into, like futures go into whether like contango or backwardation or premium or discount. So that'll be interesting to see as well.
ETP is created. At first, there's nothing in the fund, right? And people put in, and the underlying asset goes up. But let's say, a month later, still not a lot of people put in the funds. And if I want to pull out, like, where am I pulling out? Who am I pulling out from? What?
There's a bit more complexity here. I don't want to go too long on this call, but I mean, a lot of it is actually explained in the ETP paper and how that's wholly collateralized and segregated, so that you're taking value or losing value against the different components, and it's all your money. It's not being pooled with anybody else's, and that's very important because of legal ramifications. If you start pooling money, you end up into money management, and that can be a very nightmarish scenario with the SEC and other financial regulators.
Okay, so I get it now.
Cool. Thank you, Andy. So Jamie, thank you, and BTC Vix, thank you. We're coming up on the hour. Do you have anything you want to close out before we restart the chat? Final words?
I'm good. Yeah, we're running up against it. Jamie, you got anything?
I can go on for hours. No, like I'm super excited about this. Like I'm really excited about what this means for the future. I'm excited what this means for the traditional mainstream finance world. I'm excited what this means for the crypto world, and this is a really fascinating project. And this community is exactly the type of community it's needed to push this thing forward. You know, these are innovative individuals that are forward looking, that are envisioning all the potential that this thing has, and are supporting this cause. You know, I really am very blessed and lucky to have been able to be a part of this. You know, it was to some extent also a bit of a stroke of luck. And I'm counting my blessings, because this is just a wonderful thing. And the things that we have planned are extremely exciting. You know, we have I'm not super involved with all these things, but there's a whole rollout plan for the different, you know, the website and the marketing and this, that, and the other, and to establish ourselves on the different exchanges and doing whatever it needs to be done. You know, all that stuff is going to be coming in slowly but surely, right? Because this is how we're building this thing to do this correctly. And I'm personally working on a couple of things that if they don't pan out, then we're still going to do great. And if they do pan out, then it's going to accelerate the time that it'll take for us to reach where we want to get to. So, you know, this is a very, very exciting. I want to thank you for being up at the interest.
Yeah, thanks everyone for coming. I'm going to wrap this up now. I'm going to close the recording, and that way if people that haven't heard it will be able to hear it in its entirety. I'll put that up shortly. And then we may restart the chat just so that everyone's unmuted. Thanks everyone for coming, and we'll talk to you later.
Yeah. Awesome. Thank you, Jamie. Thank you, BTC Vix. Thank you, ma'am. Everyone have a good day.
Thank you.